Okay, welcome everybody to Wall Street Reporter's next Super Stock live stream, January 27th, 2022. We are back with one of our favorite super stocks, Reliq Health Tech, RQHTF over the counter, RHT in Canada on the TSX. And Dr. Lisa Crossley, the CEO, is back. Lisa, welcome back.
Thank you. Thank you. It's my birthday, so I'm delighted to be spending it with you and our shareholders. So
happy birthday.
Thank you. Yeah.
So, by next year, we should give you a birthday. So next year, the stock should be like $10.
Yeah. You can throw me a party then with actual cake.
But the good news is you had this week in the last, things are really starting to cook here. I'm actually shocked that this news with, what is it? This company here.
Datasoft Logic.
It's funny that we have another company that sounds very similar. So Datasoft Logic. This is actually a game changer. Really, we're going to be talking about kind of the significance of the news. I mean, really, this is something that should be worth $5 a share. I mean, this has the potential to add $5 in value per share, because this business can do, what is it? I don't know, 35 million in revenues. This new contract.
So, without hopefully this sounding too much like a high school math problem, but the Datasoft Logic works with over 600 home health agencies and hospice groups. Each of those has 2 to 5 doctors. Each of those doctors will have roughly 600 patients each who would qualify for our platform. So ultimately, the patient numbers here are over 500,000. So we've talked about adding 50,000 patients a year with this client for the foreseeable future. It's possible that will accelerate, but keep in mind this is 50,000 new, incremental additions every year. So it's an additional 36 million in revenue every year over the revenue in the previous year.
It's cumulative, you're saying.
So ultimately, this account is worth $360 million at full deployment annually for us. So it's a huge account. I mean, I think it's a tough market right now, so I'm not, completely surprised that the stock hasn't responded. But honestly, the Cognizant relationship is a huge game changer for us, and I think that maybe hasn't completely resonated with some of the retail shareholders, just because Cognizant isn't a household name, but it's definitely gotten us a lot of interest from healthcare analysts and the investment banks in the US who know the space and who know Cognizant very well. So that's, I think going to be a huge long-term driver of value. It may not happen in the next month or two, but I think our shareholders will, as we get more and more contracts through that, we'll have a chance to understand the significance. And then Datasoft Logic is one of the big contracts we've been working on for quite a while. It's a huge organization, very well respected, with a very large clinician base. So they have thousands of clinicians that they work with, and hundreds of thousands of patients, and they're growing all the time too. So I think that it's a very good validation of the company. It's a real endorsement that a large client like that in California, has chosen to work with a relatively small Canadian company. And I think, it's something that, you can really kind of predictably point to going forward, a significant contributor to revenue from that one client alone, because they are so large. So I think this is kind of the beginning of what we'd talked about, I think, late in the year last year, where we're really graduating to larger size clients, working more with large networks, moving into managed care organizations, hospital systems, that kind of thing, or healthcare systems rather. So the clients are going to be larger and have more of an impact on the bottom line going forward.
Okay, so no, I mean, last year really was kind of that inflection point. I mean, last March, where all of a sudden you started to scale. Okay, but this is okay. So this is a really big deal. I didn't realize how big this is. Okay, so I thought it was 35 million revenues, a year. But okay, you're saying that this is really, it's 500,000 patients that they have in their network.
Yeah.
And you're expecting to get 50,000 of them each year to bring
on board in a year. That's the current implementation plan. So that's for this sort of foreseeable future. But again, I think as we move forward, into future years, we'll be able to accelerate, it's not us, as I've said many times,
Right.
who are kind of the gatekeeper on the pace of onboarding. But I think clients, when they're starting out, they try to be conservative and assume that it'll be, very complex rollout. Once they've started, they can see that it's actually very simple, no real training required and very easy to operate. And so we expect that generally, whenever we have an implementation plan, once it actually gets going, that the client will end up moving faster. So, I think there's a lot of potential from this account, and in the next few years, you'll see some very significant revenues from this one account.
Okay, but but just starting off, I didn't realize that the numbers on the back. Okay, but starting off, it's going to be worth 35 million in revenues next year,
Yeah.
2023. I mean, you're starting, I think, the onboarding in the Q2 Q2 of this year.
That's right. Yeah.
Okay, onboarding, and it's all gonna it's gonna kind of roll out, but ultimately you expect to be adding 50,000 a year. So so the revenues basically. So this gives, I mean, for any analyst that want to model this, essentially this gives them a potential roadmap, a path to revenues going. I don't know if the word is it's growing at, I don't know, a triple digit. You could have a triple digit growth rate for the first couple of years. Because this is not the only account. This is not the only client you have. You have other clients. Okay, so there's a math. Okay, so but even with that said, 35. I'm just being conservative. Let's say 35 million. With the comps in the space, 20 times revenues in the health tech space, 700 million. Or it could be even higher. We've seen 50 times. So that could be worth $3.50 to $5 per share. The stock is only $1 right now.
Yeah.
And this is not the only news you've had. You've had some other, major contracts. I mean, everything is just kind of starting to snowball. So it's.
Yeah, I mean, we sort of internally talk about being at our second inflection point. I think there certainly was an inflection point in the spring of last year, but there's no question that we're now at a point where we have a valid business and we've got the attention of the market from the client perspective, not speaking about the capital markets, and we've got a lot of credibility. And then adding the endorsement from Cognizant has really raised our profile with some of the larger clients, and they are a definite blue chip company in healthcare. So, between that and this larger deal that, we've now been able to announce, I think you can see where we're expecting to go over the course of this year. So I think this is a big inflection point. I think we're very undervalued right now. Mind you, the market is such that I think almost everyone is radically undervalued right now.
We've seen Teladoc, a lot of Nasdaq stocks are down, 50, 75%. So, Lisa, one of the things I said was, last week when we scheduled the interview, I said, look, I don't really care what news you have, whatever, but, it's good just for investors to know, to show your face that, because it's important in a volatile market that, they see that the CEOs showing up, keeping them updated, the transparency. Because there's a lot of we've had, especially in the microcap space, a lot of companies where they're there in the good times, in the sunny days, when everything is great, the sector is up, they show up for, they're doing everything, but then like as soon as things drop a little bit, they're MIA, so. It's very, very. I think a lot of people appreciate that you're here today.
Well, this is my last week was my 6th anniversary at the company. I joined in January 18th, 2016. So January 18th, 2022 is my 6th anniversary here. I've been through some bad times with the company and stuck around. Because I've known all along that there's a really valid business here that's going to be incredibly high growth once the factors align. And I think we have that confluence of factors right now where, the Medicare and Medicaid reimbursement levels are really compelling. They were increased again this year, plus new billing codes for remote therapeutic monitoring were introduced. We're getting tremendous market pull. Certainly lots of our clients have been challenged by the pandemic over the last 2 years, these waves, but, hopefully we are getting to the end of that as Omicron is hopefully starting to come down. We're still kind of in lockdown up here in Ontario, but they're predicting that it's starting to wane. But even in the face of all of those challenges, the business has grown very significantly, and I think we're now at a point where the really game-changing growth is going to happen. I think the last 2 contracts we announced, and with Cognizant and with Datasoft Logic, are a pretty good harbinger of what's to come, and they certainly have made us all feel like all of the hard work and all of the blood, sweat, and tears has been very worthwhile.
Okay. So just to emphasize, right now, you're doing, I think you said you'd be doing 2 million a month run rate by December. So you're at that number now. You're doing 2
That's
million
right.
plus
Yeah.
in revenues as we
Yeah,
speak.
that's right. Yeah.
Okay. So the company, just as here we stand right now, 24 million in revenues. So if this is worth, 20x in the market, I mean, the stock is still very undervalued just based on the existing business, based on the comps. And of course, there's the upside. Lisa, one thing is, just in case anybody doesn't know, can you explain Cognizant, what the partnership is about? Why is it so important? Because you've
Sure.
mentioned a bunch, we have a lot of people that may not understand why this is so
Yeah.
significant.
Yeah. So, I mean, sort of the basics are that Cognizant has a care management component of their healthcare business. Their healthcare business is about $4 billion a year in revenue, but growth has been relatively flat in all of Cognizant's business. I mean, part of that is just they're so massive. They're doing 15 billion a year in revenue. You can't always be in an exponential growth phase, but they're very well respected in healthcare. They have a lot of relationships with over 300 different healthcare systems. They are integrated with over 650 different electronic medical records. And so they're stepping in and being able to offer care management to our largest clients as we go forward. Now, for example, Datasoft Logic, they don't need Cognizant to do care management because a lot of their clients are these home health agencies, so they will want to do the care management themselves. But for other large clients, managed care organizations, health insurance plans, health systems, they will feel much more comfortable that as a small company, we'll be able to scale to deliver on their care management needs if we have a partner like Cognizant, who's very well known and very well respected in the space. And so it alleviates a concern that a lot of the large clients would otherwise have about working with a small company. It's also partnering with Cognizant is a huge sort of good housekeeping seal of approval in healthcare. They are very well known, very well respected. They have a very broad footprint globally. They touch over 200 million patients. So when we, go into a client who's large and maybe hasn't heard of us, they've certainly heard of Cognizant, and they can speak to people at Cognizant, find out about the due diligence they've done on us and why they chose to partner with us. When the last company they partnered with in the virtual care space was Microsoft and Philips when they had their joint venture 10 years ago. So we're in very, good company there. And then kind of the last component of the partnership is, we are going to be working with Cognizant on going into their existing accounts. And there's been a lot of demand for virtual care, remote monitoring, behavioral health integration, transitional care management, principal care management solutions. So, we're obviously optimistic about being able to help Cognizant with some demands from their current clients. We're also going to be able to respond to RFPs and things from new clients with Cognizant. And I think we're a very powerful team. We bring something very innovative and a very, rapidly growing business. I think with Cognizant, given that they do 4 billion a year, looking at providing care management to us, which they do, it's the same cost to us as if we were paying our internal team, paying Cognizant. So it doesn't impact negatively on our margins at all. Definitely impacts positively on our ability to scale and to attract the large clients. But if you think about, their healthcare business doing 4 billion a year in revenue and feeling that it's worth partnering with us, and as you may have seen in stock news, there are analysts commenting that this is likely to drive revenue growth and profitability, improve profit margins for Cognizant. I mean, think about how much business in the care management Cognizant would be doing for it to be significant for them on a 4 billion revenue top line as it stands. So, I mean, I think they see the value of this market, and they definitely see that we bring something very unique to the space, and that's why they chose to partner with us. So I think, we have a lot of opportunities to grow with Cognizant. We're also able to grow on our own. Landing something like Datasoft Logic, even though they're not going to use Cognizant, that endorsement that Cognizant selected us as a partner is a key factor for these big companies that, really we're an unknown and therefore a potential risk. It's de-risked us a lot from that perspective.
So, I mean, basically, yeah. So, like the key thing is, these, your clients in the healthcare space are very conservative, right? So, for them to sign up with you, they want to know that this is actually the onboarding is going to take place, that the service, everything is going to happen, and the Cognizant essentially essentially it takes I guess in theory that should take the onboarding questions off the table. Like I know everybody's like always asking about the onboarding, how are you doing with onboarding? But essentially with Cognizant, you're not going to have that issue anymore, right? Like because they can scale.
Yep, and they can help not just with care management, but if we needed help with the actual, onboarding, getting informed consent from patients, anything like that, their care management team, those are the sort of human resource intensive parts of the onboarding process. So, we'll never have to worry about a bottleneck there. We'll never have to worry, what if we have challenges hiring enough people or training them fast enough? They've already got people and they already are trained. So, it's definitely, it helps us on the onboarding front. And it's not to say that we couldn't have done it on our own, but it makes a huge difference to be able to say we've partnered with this incredibly well-respected company who really has a ton of capabilities in healthcare. They work with 85% of all Blue Cross Blue Shield plans. They do billing for Medicare and Medicaid. They act as a clearinghouse for claims. They integrate with all of these different electronic medical records. I mean, they really have a comprehensive IT services offering in healthcare. But it's not, it's not a company that all of us have necessarily heard of, but it's a $48 billion market cap company, so it is a very significant entity.
Yeah. Okay. So let's get into some audience questions here. We got a bunch of questions. Hopefully we have time. Okay. So Josh is saying, so basically this deal with Datasoft Logic essentially doubles your current revenue. It'll double the revenue.
More than doubles the current base. Yeah.
More than doubles.
Yeah, I mean, we've talked about having implementation plans with 200,000 patients that would be onboarded by the middle of next year. But, obviously this implementation plan, if we're looking at 50,000 a year, goes out a little further than middle of 2023, but it covers 500,000 patients. So we're certainly looking at, very conservatively, more than doubling our patient base.
Okay. A couple of people actually were asking, okay, so congrats on adding all these contracts. Where are you now in terms of onboarding and collecting revenues in terms of accounts receivable? We got a couple questions about accounts receivable. How are you doing?
Yeah, so we have been collecting. Even in December, we'd already started collecting some of those aging receivables. So expect to get those cleared by the end of this quarter, which will be nice. I think our auditors will be very happy about that. Our newer clients, receivables are on standard terms, so we don't have to really worry about aging receivables with the current clients. We're just clearing out that backlog. In terms of onboarding, I think we've talked about this. We hit that $2 million a month revenue run rate by the end of last year. So onboarding's going as we'd expected. I will say Omicron is probably slowing some clients down a little bit, but if that impacts growth at all this quarter, and we don't know that it will, but if it were to, it would be a very temporary thing that would be made up very quickly in the next quarter. So, I think we're happy with how we've been able to respond to, challenging market conditions in the customer market, not just the capital markets, but, that have come from these different waves. We've still been able to kind of keep moving forward and keep growing the business, continue to add clients and patients. So everything's going very well on that front.
Okay, Samantha's asking, okay, congratulations on the new contract. Okay, can you speak to the cost structure regarding your scaling of onboarding patients? Can you speak to the other potential larger contracts in the pipeline which we're discussing?
So I mean, we've certainly talked about there are larger contracts or clients that we're working on, and we'll just have to keep everyone posted on those as they kind of
more good news to come.
More good news to come. In terms of sort of cost structure around onboarding, so I mean, onboarding itself is a tiny component of our overall cost, so it's not really significant. As we scale up, where we really are seeing economies of scale, it's not so much that the cost of onboarding changes; it's pretty consistent no matter how many patients we're adding. But where we see economies of scale are things like server costs. If you have a server and you're not using all of it, but you're paying for it, then your cost per user is higher. Certainly, it's an economies of scale business, as any software as a service is. So the more clients we onboard, the better our margins are. And I think you could see that last year, starting out under 50%, ending up at 72%. So, our margins definitely improve the more patients we add.
Okay, questions about Datasoft Logic. Okay, so Dennis is asking, if Datasoft is able to manage their own cure management, does that mean they will be onboarding their patients themselves?
Yeah, so I mean, some of the onboarding has to be done by us because some of the onboarding isn't so much putting a device in a patient's home and getting the patient up and running. It's getting the patient list from the healthcare provider, putting that into our platform, running the pre-screen through Medicare and Medicaid to ensure that those patients are eligible for the services that the clinician plans to deliver through our platform. So those are pieces that we always will be responsible for. But there are, because Datasoft Logic works with home care agencies and hospice groups. And there are billing codes that home care agencies can leverage for installing devices, for training patients on the devices, and the care management piece. So, they'll probably do some of that where it might otherwise be done just by mailing a patient a device and maybe having either an automated phone call or a phone call from our care management team to that patient. So, we've talked about how our sort of premium service with full care management is $100 per patient per month. We've disclosed that with these, clients, our revenue is going to be $60 per patient per month. And that sort of reflects the fact that they'll do a lot of the care management and maybe even a little bit of the onboarding piece.
Okay. Stephen is asking, will you be able to onboard the first 50,000 from this data CureLogic by the end of this year, considering you're starting in Q2?
Probably not, no. I think it's a little bit like, what is that expression that, your battle plan never survives the first engagement with the enemy or something. But, so we sort of always think of it as, we've got a tentative plan with this client until we start. And then, when we start, they may end up deciding they want to go faster. They may end up deciding they want to go slower. We may hit certain hurdles. There may be another, Theta wave or something instead of Omicron that has a minor impact. But, I think we'll know more by the end of Q2 about how many patients will get on from Datasoft Logic this year. And we're certainly, ready and willing to put on as many as they'd like to move forward with. But, we have to work on the client's pace, and we certainly don't want to, scare them by trying to push too quickly. But, we'll certainly onboard, I think, a significant number of Datasoft patients this year, but we won't really know, I think, until the end of Q2 what that number is likely to be.
Kind of an interesting question here from Josh. Do you expect Cognizant to buy you out? I mean, you mentioned those could,
Yeah. So, we really are building the business with the intent that we be self-sustaining. We're still planning to uplist to the Nasdaq later this year. And I really believe that you need to build your business with the intent of it being a completely independent organization for its lifetime. I'm not naive about the fact that there is a huge trend in healthcare and probably in lots of other industries towards consolidation. And my goal has always been not to sell the company, but to, at the very least, get us as quickly as possible to a point where if someone were to come in and, try to take over and buy the business, that we could, essentially attract the attention of multiple suitors and capture the highest possible value for our shareholders. So I don't think anything's likely to happen, honestly, on that front anytime soon from anyone, Cognizant aside. I think, for the most part in healthcare, a lot of the big companies really can't value a company for the purposes of M&A until that company has over $1 billion valuation of its own. So I think we've got some time to do some growing and to get to a point where we could get a really compelling valuation if we were to be acquired, but we are in no way courting acquirers. And that's, not something I would particularly like to have happen, but, it's not a bad thing to have people who are interested, even if we don't, sort of go down that path. But, certainly we've consciously, from that perspective, really tried to fly under the radar for quite a while. Because I think, the last thing we wanted was to have someone come in, do a hostile takeover, get bought out when we were really undervalued. And I think by the time at this point that, anyone could put in a meaningful offer and do due diligence, go through the whole process, we would have a very compelling valuation before, anything happened. So it's not my goal. We've actively tried to avoid that kind of thing to this point. It's not something you can necessarily avoid as your profile rises, but it's not our goal. And we will make sure that, we get value for our shareholders, whether we stay our own independent entity or something else
So
happens.
nothing under $20 a share. No offers below $20 a share will be entertained.
Yeah, great.
So,
Works for me.
okay, question here. That's interesting. There's a couple of interesting questions, and we'll wrap up. Okay, so Richard is asking, now that you're working with these billion-dollar market cap companies, should we expect some mega patient contracts, like mega beyond what you had?
I think
I think it's going to snowball to like crazy
I do
numbers.
think that there's definitely a snowball effect in healthcare. There's a lot of, we're waiting for someone else to try you out, and they take the risk, and the more people who do that, the larger clients you get, and it definitely does snowball. I will say, and I've always said that, the larger clients take longer to get across the finish line. So I think, some of what we're doing now, working with these larger clients, you will see, I expect, sort of similar scale contracts announced this year. But I think, 2023 is probably when you're going to start to see another increase in scale in terms of clients. It's going to take a little while for some of these relationships that we're building now, thanks to the Cognizant agreement, to kind of come to fruition. But I think every quarter we'll have a little bit more visibility, and certainly it's not that we're not going to have other large clients or contracts this year. But I think, every year going forward from here is going to be full of very pleasant surprises.
Okay. Okay, so we got a few more questions, then we'll wrap up here. Let me just see if we can catch up to these. Okay, so and again, I think we should maybe just put this to bed once and for all in terms of the onboarding.
Sure.
Now that you have Cognizant, helping out in terms of the onboarding, does this essentially eliminate any challenges that you would have?
It does, exactly. So, most of the onboarding process from our perspective is fully automated. So getting those patient lists, doing the pre-screens, and, having the patients' pre-authorizations and getting into the system. And so the piece that's a little more challenging to scale care management is challenging because it's human resource intensive. So we need to hire new medical assistants to do that. Now, as I think I told you on one of our previous visits, we hired 5 care managers and had over 200 qualified applicants for those positions. So, we can scale our internal care management capabilities very quickly. But I think the benefit of working with Cognizant is that, they can scale instantaneously to any scale. So we can reassure a client who says, well, I have 1 million patients and I want to put 50,000 on next month. That's not a problem for Cognizant. So, the piece of the business that was the only potential challenge in terms of scaling very, very quickly was that human resources intensive piece, the care management piece, and that's no longer an issue.
So I think we've used this metaphor before, but essentially this is kind of like the Cognizant deal. Essentially, it's sort of like cloud computing, whereas before, you had a business which is, everything runs off one server that's in somebody's office. Nobody's sure if it can scale to, millions of people going to the website at once. But, when you go on a Amazon cloud or whatever it is, whatever these cloud computers, they can scale infinitely to, billions of people.
We use Amazon Web Services and Microsoft Azure, and part of why we use those instead of maintaining our own servers is it does give customers a lot of comfort that we've got hosting providers who can scale to any scale and have a lot of redundancy. And Cognizant is sort of along the same vein. It just it's a big recognizable brand name in healthcare, and so if we say, the care management piece is going to be taken care of by Cognizant, it just gives people a lot of comfort.
Okay, 2 more questions. That's it. We'll wrap. Okay, so you mentioned. Okay, so I think people. I think Nasdaq. What's the point of Nasdaq?
We're working on it. We just brought on a new CFO last quarter, so we're working on that process. I think the market being where it is right now, I'm glad we didn't think we were going to try to uplist this quarter, because we would like the market to, shake out all of these nerves that it's currently having before we do anything like that. But our plan is that later this year we'll uplist to the Nasdaq. I think, again, we'll know more by the end of this quarter and into next quarter as we have a better sense of other new contracts that we're going to be able to announce, and how quickly we're going to onboard with Datasoft Logic. And as we have a chance to see what the market is going to do, it's a pretty dismal market right now out there. But the
Yeah, there's no
good thing
rush.
is,
There's no rush to be on
yeah,
Nasdaq. I mean, and there's not going to be any reverse split, right? Like let it just happen organically. Let the
yeah,
stock
no,
go
and
five,
you know, I
$6.
think we may not have talked about this too much, but I know we've talked about it a little bit in the past. You know, by the end of this year, we'll be throwing off quite a bit of free cash, and I think the most logical, you know, most value generating for shareholders thing for us to do with that cash is a share buyback. So, you know, I think there's certainly no need for a reverse split. And we really don't want to uplist to the Nasdaq when it's too soon. So if you get onto the Nasdaq by virtue of doing a reverse split, those stocks tend to not do well. So you really want to be at a point where the business is successful enough and has a lot of news that you know is coming in the near future and will continue to come over the long term. That's a good time to uplist to the Nasdaq. But you know, doing it just to get that initial bump in valuation that you know you do when you uplist, you'll come down hard and fast from that. So you know, we want to make sure we uplist at the time when it's really the right move for the business.
Yeah. Okay. So question here. How is Datasoft different from other third-party sellers? I.e., aren't they just offering your services to their own clients? How do you know how many of their clients will onboard?
Yeah. So we're not actually using them as a sort of channel partner or, you know, resale agent. They came to us because their clients have asked for remote patient monitoring. So the home health agencies have said, the doctors we're working with have said that if, you know, we can't find them a solution, they're going to find a different home health agency who can. And so they looked to Datasoft Logic to, you know, see if they could build it into their platform, the whole virtual care piece. But they do, you know, a lot. They have a very comprehensive platform, but it's not this. It's more around practice management. So, and they've been actively looking for a partner who can handle the virtual care piece. And we, you know, come highly recommended, and we, you know, work very well with home health agencies. We understand that workflow. So, it's not that they're going to sort of be offering us to their clients alongside with their software. It's that this was a requirement from their customers. And so they're fulfilling it by partnering with us. So that's how we got patients.
A great question here. In your opinion, what's the biggest catalyst in the next 6 months?
I mean, I think, you know, the big catalysts for us from sort of the capital markets perspective are, you know, getting a few quarters out and, you know, getting that data out so that people understand, you know, how quickly the business is growing and that, you know, there are real revenues here and showing that we're collecting and getting rid of those aging receivables. I think from a customer perspective, you know, the big catalysts for us are every time we sign a new large scale contract, whether that's a partnership with, you know, Cognizant or something like the Datasoft Logic contract, you know, those are definite catalysts. This is very much, we're at that sort of autocatalytic stage where every time you add one of those clients, it attracts the attention of another group of clients at that scale. So we've certainly seen that at the smaller scale, but you know, where you get into the really crazy levels of growth is when you're attracting clients at the scale we're at now.
Are you going to? Okay, so we're going to keep going after small doctors.
Yeah, you know, the smaller clients mostly come to us through inbound sales, so mostly through referrals from some of our existing clients, and it's very easy. You know, as I say, most of our onboarding process is fully automated, so you know it's very easy for us to add clients to the platform, whether they're big or small. So there's no reason not to continue to service the smaller clients. And you know, there is a trend at consolidation in healthcare, and not just in terms of the businesses, but in terms of clinical practice. A lot of healthcare systems are buying up community practices. So sometimes you might, you know, have a few small practices and then find out that they've been bought by a big network, and it gives you access to a much larger patient base. So there's a lot of value in continuing to support those smaller clients.
Okay, excellent. Last question. Any analyst coverage coming up?
Yes, I'm never sure how much I'm allowed to say about that, but let me just say lots of conversations and lots of enthusiasm, particularly from U.S. analysts. I think, you know, the conversation I have the most often with U.S. analysts is, I don't understand why, you know, you're not getting more recognition in the capital markets. You know, your share price should be much higher. Because I think, you know, when we talk to the US analysts, they understand Medicare and Medicaid very, very well. They know the space really well. And, you know, they can see that there's really no competition. You know, we are doing something very unique. And I did get a lot of calls, inbound to me from analysts after we signed the Cognizant agreement. I think the analysts in particular who, are really dug in deep in the space very much understand the significance of that. So, I expect analyst coverage is coming. I will say I haven't been courting it. A lot of CEOs will spend a lot of time trying to get analyst coverage. We're not raising money. We don't need to raise capital to fund our own operations. We can do that ourselves. So, while I always prefer it if the share price is doing very well, my focus has really been a little bit more internal on operations and making sure that we're, well positioned for the growth that we're expecting. So I haven't been doing a ton of kind of promotion or outreach to analysts or anything like that. But I think the fact that they're coming to us is a very, very good sign. So.
Okay, excellent. Lisa, on that note, I want to thank you for coming on today for the quick update during a very volatile market. I think everybody appreciates that. And we hope to hear more from you in the coming weeks with massive new contracts and exploding revenues.
Yeah, well, I'll try not to disappoint you, Jack.
Thank you again.
All right, thanks. Take care, everyone.